Is passive investing costing you more than you think? Active ETFs aim to beat the benchmark, while passive ETFs just settle for them. Embrace an active strategy that helps you build stronger portfolios. Invest with a global leader in active fixed income ETFs with JP Morgan Asset Management. Visit jpmorgan.com/getactive to learn more. JP Morgan Asset Management is the brand name for the asset management business of JP Morgan Chase & Co. and its affiliates worldwide. This communication is issued by JP Morgan Distribution Services Incorporated, member of FINRA.
When you own your own business, you own every decision. Now own the card that rewards you for it. Chase Sapphire Reserve for Business is a painful card that elevates your travel experience and offers premium benefits that can take your business to the next level. Sapphire Reserve for Business offers 8x points on all purchases through Chase Travel, 3x points on social media and search engine advertising, airport lounge access, and more. With over $2,500 in annual value, it's the card that gives back all you put in. Learn more at chase.com/reserve business. Chase for Business. Make more of what's yours. Account subject to credit approval. Restrictions and limitations apply. Cards are issued by JP Morgan Chase Bank, N.A., member FDIC. Introducing the all-new Adobe Acrobat Studio, now with AI-powered PDF spaces. Do more with PDFs than you ever thought possible. Need AI to turn 100 pages of market research into 5 insights with a click? Do that with Acrobat. Need templates for a sales proposal that'll close that deal? Do that with Acrobat. Need an AI specialist to tailor the tone of your market report to sound real smart in real time? Do that with the all-new Adobe Acrobat Studio. Learn more at adobe.com/do-that-with-Acrobat.
Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Daybreak Weekend, our global look at the top stories in the coming week from our Daybreak anchors all around the world. Straight ahead on the program, we'll look ahead to the final monetary policy decision from the Fed of 2025 and how that could affect interest rates into the next year. I'm Nathan Hager in Washington.
I'm Caroline Hepker in London, where we're looking ahead to the Blackhat Cybersecurity Conference in London.
I'm Doug Krisner, looking at why China's economy is stuck in deflation.
That's all straight ahead on Bloomberg Daybreak Weekend. On Bloomberg 1130 New York, Bloomberg 99.1 Washington, D.C., Bloomberg 92.9 Boston, DAB Digital Radio London, Sirius XM 121, and around the world on BloombergRadio.com and the Bloomberg Business app.
Good day to you. I'm Nathan Hager. We begin today's program with the Federal Reserve. The central bank holds its final two-day policy meeting of 2025 this week, issuing its final monetary policy decision of the year on Wednesday. So for more on the path ahead for interest rates, we are very pleased to be joined by Stuart Paul, U.S. economist with Bloomberg Economics. Stuart, thanks for being with us. And it seems as though the market has all but fully priced in that we are going to get a rate cut this week. Did some of the private data that we've seen ahead of this decision sort of shake any of that bet?
I don't think so. When we look at some of the private sector data, including the ADP report showing a pretty cool labor market, and then some of the official data as well, relatively weak manufacturing in the month of September, import prices that were relatively dull when we received those data points earlier last week. All of it basically gave the green light for this rate cut. So I don't think that the Fed is going to be that concerned about whether it can defend its decision to cut when it meets this week. I think that the bigger conversation around the table at the FOMC meeting is going to be what message to send to the markets and what message to send to interested parties out there when it releases its summary of economic projections. I think that's where we're going to see more division and, in fact, maybe a little bit of confusion.
How so? I mean, I guess we have seen sort of diversion of thinking when it comes to where policy should go from even some of the Fed speakers ahead of this meeting. But, I mean, how much of a change could we see in the dot plot?
I think it's going to be pretty significant in 2026. And I think that even more important than the dispersion of dots in the dot plot included in the summary of economic projections is to remember that the voters on the FOMC next year are going to be shifting pretty dramatically. There's going to be a contingent of hawkish regional Fed bank presidents that become voters. And among them are Dallas Fed President Lori Logan, Cleveland Fed President Beth Hammack. Those are some folks who were among the more hawkish and the more vocal Fed speakers over the last several months. And when they become voters, it's going to be all the more important to try to identify which dots they are. And I expect they're going to be among the more hawkish cluster when we look into 2026. A lot of attention has been put toward who the next Fed chairman is going to be. But I think that more important, actually, than who the next Fed chairman is this point about division on the Fed, because we're going to see a lot of it. We're going to see a growing division on the Fed.
And we've even heard some concerns raised, I guess you could say, about whether that next Fed chair is going to be able to deliver the kind of rapid rate cuts that President Trump has been looking for. We heard from PGIM's Greg Peters just in the last couple of days saying even if it is Kevin Hassett, the president's White House economic advisor, he might not be able to get that kind of consensus. How do you see it?
I think that's right. I think it's going to be difficult for the next Fed chairman to build a coalition of voters that can show some sort of a united front around the pace of rate cuts. I think that's going to be true of any Fed chairman. It seems as though a lot of attention over the last week has turned to whether or not somebody like Kevin Hassett, someone coming from the White House, has the credibility that the Fed will remain devoted to its 2% inflation target. Somebody like that has the credibility to keep markets calm. I will say that when the trial balloon was floated a couple weeks ago now regarding Kevin Hassett as the finalist for the chairmanship, he passed the markets test with flying colors. Equities rallied, 2- and 10-year rates fell. It's exactly what the White House wants to see. So as much as we've heard chatter over the last week questioning whether somebody like Hassett has the credibility to build a coalition or to maintain the Fed's 2% inflation target, it seems as though the market thinks he has enough credibility. It seems as though, to me, no matter who the next Fed chairman is, it's going to be difficult to build a coalition. I think that's just the nature of the evolving voting roster at the FOMC right now.
So given the evolving roster, how much attention should the markets be putting on Chairman Powell's news conference after the decision on Wednesday?
I think that markets will put a lot of weight on it, basically no matter what. He still is the person who will be leading the FOMC for pretty close to 6 months. And I think that the question is going to be around whether the Fed will maintain any sort of cutting pace in the first half of next year, given the expectation that a new, more dovish chairman will take the reins starting in May. So I think that when we see this press conference from Fed Chairman Powell on Wednesday, the question is really going to be, what's it going to look like in January? What's it going to look like as we get towards the end of Q1 and into Q2? What is the Board of Governors and what are the regional Fed bank presidents thinking about cuts in the first half of next year? Right now, our base case in Bloomberg Economics is for the Fed to move more towards a quarterly cadence of quarter-point cuts next year. And that's based on our expectations for economic fundamentals right now. I think that Fed Chairman Powell is going to try his best to not show his hand in any one direction. But again, when we just look at the evolving roster, it's going to be very difficult next year to deliver quick rate cuts, the kind that the president wants.
Yeah, it is going to be a fascinating discussion and a fascinating final decision coming up later this week. Thank you for this, Stuart. Really great having you on with us. That is Stuart Paul, U.S. economist with Bloomberg Economics. We move next to more corporate earnings in the tech space. We hear from two big names on Wednesday, Oracle and Adobe. Let's bring in Bloomberg Intelligence technology analyst Anurag Rana for more on this latest round of tech results. Anurag, these are a couple of names that have kind of been hit pretty hard lately around the question about whether artificial intelligence valuations have gotten too stretched. So let's start with Oracle. How high is the bar for their earnings?
So I think they have to come out and basically explain that the big backlog of orders that they have from OpenAI, how is that going to get funded and how is that going to get recognized into revenue? That is the single biggest question in our mind at this point, especially when you go back and look at the stock chart. it had a massive run up when Oracle announced that big order book from OpenAI. But in the last, you could say, 2 months, 2.5 months, there has been a lot of scrutiny in the market as to how some of this is going to get funded. And that, I think, has what has been weighing on the stock. So the management has to come and explain their strategy of data center expansion and where that money is going to come from.
Yeah, to your point, I think we saw in just the last few days a report that the cost of protecting Oracle's debt from default hit its highest level in more than 15 years. I mean, what kind of explanation can we expect for how Oracle can kind of service that?
So one of the things you have to think about it is there is a lot of investor demand for anything that's related to data center expansion, because I think people understand that's an area where you are looking at more and more build up over the next several years. So, whether it's private credit or whether it is private equity, a lot of these companies may be able to fund some of that expansion. But the big question is, at what level? Because one of the things is OpenAI has talked about several $100 billion investments out in the public for those data centers. So the appetite is not so much. And also remember, Oracle is not the one that's funding a lot of that from their own balance sheet or their cash flow. They go out in the market, they raise the funds with the help of a consortium, and that goes, into that special purpose vehicle. It does not impact Oracle's balance sheet directly, but at the end of the day, they are the ones who will be recognizing some of the revenue from it, not just the investors. So they have to come out and explain a bunch of these things.
Where do you see Oracle stacking up compared to some of the other hyperscalers? I mean, we think of the Magnificent Seven all the time, and Oracle, of course, isn't part of that cohort. Is it going to stay behind?
So one of the things that we have talked about quite a bit over the last few years, when it comes to cloud computing, there are three big players, Amazon being the biggest one, Microsoft after that, and then Google, the third player. But because of this massive demand for AI infrastructure and AI infrastructure workloads, Oracle has really kicked up and become what we call as the fourth hyperscale cloud providers. And the big question is, are they each other taking market share from each other? There is a little bit of that going along. But at the same time, the market has expanded very, very strongly, because one of the things that you have to do is when you're running an application like ChatGPT, you will be running on a cloud infrastructure. You typically don't run that in somebody's internal data center. Same thing for an enterprise when they are expanding some of these AI workloads. Cloud is usually where it's hosted. So when you take a look at that, the end markets, which is cloud infrastructure, has actually grown quite nicely, which gives growth opportunities for all four vendors and not just one or two.
Let's talk about Adobe now. Looking at a chart on that stock, it's kind of upper left to lower right for the whole year here. So what are the expectations around Adobe's results?
Yeah, I think that seems to be a big story when it comes to Adobe, that their lunch is going to get eaten up by AI-related tools that are out there, free tools. So when you look at Adobe and you go back a few years before the launch of any large language models, this company used to trade even higher than Microsoft because of high free cash flow, the perception that nothing can happen to some of their marquee products, that is Photoshop or Acrobat, etc. But what has happened is when you're seeing these free products that can create images and videos, investors are worried that their core business is going to get attacked and they won't be able to protect that. Now, when you look at their results, at least in the last 3 quarters, they have reported decent results. But at the same time, they have not seen any acceleration. And I think that's always brings that question mark. So we're going to see that a little bit of the same thing. They're going to come out, talk about how they can grow next year. They're going to talk about their own AI products. The question is whether that's going to be enough to pacify this little fear that's out there in the market that Adobe is a net casualty of AI-related developments.
Thanks for this, Anurag. Great having you with us. That's Anurag Rana, technology analyst for Bloomberg Intelligence. And coming up on Bloomberg Daybreak Weekend, we look ahead to the Blackhat Cybersecurity Conference in London. I'm Nathan Hager, and this is Bloomberg.
Is passive investing costing you more than you think? Active ETFs aim to beat the benchmark, while passive ETFs just settle for them. Embrace an active strategy that helps you build stronger portfolios. Invest with a global leader in active fixed income ETFs with JP Morgan Asset Management. Visit jpmorgan.com/getactive to learn more. JP Morgan Asset Management is the brand name for the asset management business of JP Morgan Chase & Co. and its affiliates worldwide. This communication is issued by JP Morgan Distribution Services Incorporated, member of FINRA.
Running a business is hard enough, so why make it harder with a dozen different apps that don't talk to each other? One for sales, another for inventory, a separate one for accounting. Before you know it, you are drowning in software instead of growing your business. This is where Odoo comes in. Odoo is the only business software you'll ever need. It's an all-in-one, fully integrated platform that handles everything: CRM, accounting, inventory, e-commerce, HR, and more. No more app overload. No more juggling logins. Just one seamless system that makes work easier. And the best part, Odoo replaces multiple expensive platforms for a fraction of the cost. It's built to grow with your business, whether you are just starting out or already scaling up. Plus, it's easy to use, customizable, and designed to streamline every process, so you can focus on what really matters: running your business. Thousands of businesses have made the switch, so why not you? Try Odoo for free at odoo.com. That's ODOO.com.
So, let me get this straight. Your company has data here, there, and everywhere. But your AI can't use the data because it's here, there, and everywhere? Seems like something's missing. Every business has unique data. IBM helps your AI access your data wherever it lives to change how you do business. Let's create smarter business. IBM.
This is Bloomberg Daybreak Weekend, our global look ahead at the top stories for investors in the coming week. I'm Nathan Hager in Washington. Up later in the program, we'll preview upcoming data out of China and the health of the Chinese economy. But first, cybersecurity challenges facing Europe are clear. Airports, businesses, financial institutions are all at risk from an increase in cyber attacks by criminals and state actors. That's the backdrop to the Blackhat Europe conference in London, which gathers top professionals for briefings on modern-day strategies to counter those threats online. Let's get more from Bloomberg Daybreak Europe anchor Caroline Hepker in London.
Nathan, the Blackhat Cybersecurity Conference in London over the next few days will look at the latest trends in cybersecurity. As attacks are becoming increasingly costly for governments and businesses, sometimes into the billions, briefings will be held on how to bolster cyber defence strategies in both the public and private sector. The Bloomberg London Tech Summit recently featured interviews with top CEOs on how businesses can build resilience in a rapidly changing threat landscape. Speaking at that summit, Yevgeny Dibrov, who is the CEO of the cybersecurity firm Armis, who explained why there's been such a surge in interest in the company.
The great demand that we are witnessing right now because of attacks on critical infrastructure, basically all the geopolitical tensions, Russia, Iran, North Korea, everybody, you see a lot of targeting infrastructure, targeting national infrastructure, the most critical areas, from airports to grids to manufacturing in the US, in EMEA, we see a lot, UK as well.
That was Armis CEO Yevgeny Dibrov being interviewed there by Bloomberg's senior cybersecurity reporter Jordan Robertson. And Jordan is with me. Great to have you on the programme. It has been such an important and interesting year, hasn't it, for your beat? The era of rapid digital advancement of AI. Can you just talk to us about the elevated kind of cyber threats levels that we're seeing in the UK, in Europe? I mean, you heard it in that interview that you did. It's everything from big companies to personal data to airports. This ahead of discussions at Blackhat.
Sure, yeah, thanks for having me on. You know, if you take a look at the conference agenda for this Blackhat conference, I mean, first of all, it's a very technical conference. It's technical content for technical people. But the overarching themes are still the same that people would kind of recognize. And there are two main themes that are happening in cybersecurity right now. One, and perhaps the biggest one, is ransomware. Computer hacks used to be pretty secret things. Companies, by and large, could keep these events secret unless certain data was leaked, and they could prove that certain data was leaked, personal information, things like that. But most cyber attacks were secret, and companies were allowed to do that. You can't keep secret a ransomware attack because your business stops. And we saw that this year with the attacks on M&S. We saw that this year with the attacks on Jaguar Land Rover, which brought really significant critical operations to a halt. And this idea of ransomware, which very often is executed by young people, by kids in many cases. You're talking about teenagers. You're talking about young people who connect online and kind of, I guess, get radicalized, if you will, and see this as a real business opportunity. There are millions of pounds to be made through some of these hacks. So these attacks are very easy to do. They're extremely disruptive. You can get a lot of money in extortion fees if you're the hacker. So, one of the things that the cybersecurity industry, including this conference this coming week, is really focused on is, technically, how do you get ahead of these attacks? Like, are there technical countermeasures you can put in place to repel ransomware attacks? And it's a really hard problem because it's not so simple as saying, there's a bad actor on my network, therefore they're not allowed to do anything. Bad actors routinely impersonate real users or steal credentials of real users. So if you're running a large network, the biggest threat to your network is going to be somebody on your network that is using credentials that belong to your employees. So very, very hard problem. There are no easy technical solutions, but that's one of the themes of this conference. And another, which is kind of a perpetual theme, ransomware is here to stay. And one of the things I like to describe is that we didn't have ransomware before we had crypto. Like, we have crypto and now we have ransomware. And the two are interrelated because prior to crypto, it was really hard for hackers to get paid. They would sell data on the dark web, and they'd have fake bank accounts, and it was very, very challenging to actually collect revenue from your hacks. But now that you have digital currencies, that's what's facilitating all of these attacks and making it possible for criminals to get paid.
Okay.
The other side of the ledger are espionage attacks, as you heard the Armis CEO talk about, which is, now that everything is digitized from obviously from telephones to cars to transportation networks to the power grid, everything will have a digital footprint. So every country on the planet has intelligence services that's trying to build up their cyber capabilities to potentially disrupt their adversaries. And, that can range from hacking into a power grid and not doing anything, but positioning yourself so that if there is some sort of armed military conflict, you can flip a switch and turn off the lights. And those are the threats that people are trying to protect against.
Yeah, and wow, that's a kind of head-spinning list, isn't it, in terms of the threats that are out there. And you mentioned a little bit about the difficulties of how businesses come up, specifically businesses, with strategies to try to counter these attacks. Maybe we can talk about that a bit more, because the thing that was extraordinary about the JLR hack in the UK was that the government agreed to an emergency loan for Jaguar Land Rover so that it could pay its suppliers. They were worried about the fallout across the UK. And so that is something very novel as well.
Yeah, the Jaguar hack was very significant in many ways, and we did some pretty great coverage of it. And as you mentioned, the most significant aspect of it was the UK government stepped in and underwrote an emergency $2 billion loan to Jaguar Land Rover, which, by the way, is owned by a $500 billion foreign conglomerate called Tata. The UK government underwrote that loan to bail out the company. It's not because the parent company couldn't pay. It was, the concern that if this breach dragged out, you'd have people out of work for a long time, potentially forever, if the factories had to close. And it's the first time to our knowledge that we've seen a government underwrite a rescue of a ransomware victim, especially to this degree. Governments will often send their cyber experts into these, critical companies, nationally important companies, to help them investigate breaches. But, now that the UK has kind of gotten into the business of underwriting the rescue packages for a ransomware victim, it raises this question of precedent. And it's like, is this what we're doing now?
Yeah.
And what are the implications of that? And to be clear, this is a loan that needs to be repaid. But if you're a ransomware operator and you're a hacker, this is the best news you could have asked for, because and you are basically guaranteed that the companies that you are hacking will survive long enough to potentially pay you. And that's what they're after.
Yeah, if they disrupt things enough that there would be a payday at the end of it. Yeah, you've also covered the threats to banks and critical financial infrastructure of particular interest, I imagine, to our audience. How would you quantify and characterize the increase in hacks, especially from China, but maybe other countries?
Yeah, this is such an interesting topic because whereas ransomware is in your face, I mean, security experts describe ransomware as an exit strategy. The exit strategy is announcing to the world that this has happened and then demanding payment. So everybody sees a ransomware attack. These attacks on the financial system, however, that we've been writing about largely are designed to be totally invisible. And, you know, what hackers in those cases are after is not disruption. In fact, it's the opposite. What they're after in those cases are intelligence, are information about how the financial system works, who's under investigation for sanctions and things like that. You know, powers of the government, whatever government that is, US, UK, wherever, governments have extraordinary powers to sanction individuals, and foreign governments that may be targets of those investigations are extremely interested in understanding who's on that list, who's being investigated, what information do they have. So there's so much, you know, our reporting this year focused largely on the U.S. Treasury, which has suffered a series of very devastating espionage attacks in recent years. And what we looked at was, how does the U.S. Treasury, which has a large cybersecurity team, which has a great budget for cybersecurity, an increased budget, you know, for this kind of work, how do they keep getting hacked at a very deep level by Russia and China in particular? And the answer is a little bit complicated, but one thing that you take away from it is there is no silver bullet in cybersecurity. If there were, everybody would use it. There are best practices, there are approaches, there are techniques you can use, but there is no silver bullet. And, you know, so what you're left with is, whether it's ransomware or whether it's an espionage attack, you know, cybersecurity is an even more difficult problem now than it was before. Even though we have more cybersecurity protections, we have more vendors. Like the Blackhat conference, it's a vendor conference with research as part of it. So they're going to be there selling cybersecurity technologies that, you know, they all do something. But if there were a technology that could cure cybersecurity attacks, you know, everybody would obviously, it'd be the most valuable company in the world.
It's the game of chase, isn't it? With all crime, is how to, you know, or perhaps criminal and other activities, how to keep pace. A final word then too on AI and what difference artificial intelligence is making, because this is another area that you've reported on in a big way over the past few months.
So what I've been doing the past couple of years is, with most sources I meet, and these are, you know, senior cybersecurity people at governments, at companies, or whatever, and I will try to ask every single one of them, how is your organization using AI today? Like practical examples, not like experimenting, but like practical examples. How are you using AI? It's been really revealing. Like most of them have said, not really at all. Very surprising to me, with some exceptions. And the reason that's surprising, when it comes to cybersecurity, you're dealing with hackers. The way it's been explained to me, you're dealing with hackers that in most cases are trying really, really hard not to be detected. If you're writing that code to perform those attacks, you're not going to outsource that to a large language model, which can hallucinate and make mistakes and maybe blow up your operation. So we're seeing that there's not a lot of utility for these LLMs in custom hacks, espionage attacks, really high-level stuff. There's too many uncertainties around it. Where we are seeing AI being used is especially true in spamming. So if you're doing a spam operation, it's kind of a funny story, is we're seeing increased spam activity in countries that previously didn't have a lot of it. Japan comes up a lot. So places where you have character-based languages that are not really used elsewhere in the world, some of these countries have seen very, very low rates of spamming for decades. There just isn't a lot of that activity because crafting the messages in the local language is very challenging. You have to have subject matter experts. Large language models have really helped the hackers in that regard.
Jordan, that means many more stories I expect from you and from your colleagues. Thank you for being with me. Been a hugely fascinating conversation about cybersecurity. Bloomberg's senior cybersecurity reporter, Jordan Robertson, thank you. And we'll have full coverage on Bloomberg Radio of developments on this topic and the Blackhat Cybersecurity Conference in London in the coming days. I'm Caroline Hepker here in London. You can catch us every weekday morning for Bloomberg Daybreak Europe, beginning at 6 a.m. in London. That's 1 a.m. on Wall Street. Nathan.
Thanks, Caroline. And coming up on Bloomberg Daybreak Weekend, we take a look at why China's economy is stuck in deflation. I'm Nathan Hager, and this is Bloomberg.
Running a business is hard enough, so why make it harder with a dozen different apps that don't talk to each other? One for sales, another for inventory, a separate one for accounting. Before you know it, you are drowning in software instead of growing your business. This is where Odoo comes in. Odoo is the only business software you'll ever need. It's an all-in-one, fully integrated platform that handles everything: CRM, accounting, inventory, e-commerce, HR, and more. No more app overload. No more juggling logins. Just one seamless system that makes work easier. And the best part, Odoo replaces multiple expensive platforms for a fraction of the cost. It's built to grow with your business, whether you are just starting out or already scaling up. Plus, it's easy to use, customizable, and designed to streamline every process, so you can focus on what really matters: running your business. Thousands of businesses have made the switch, so why not you? Try Odoo for free at odoo.com. That's ODOO.com.
So, let me get this straight. Your company has data here, there, and everywhere. But your AI can't use the data because it's here, there, and everywhere? Seems like something's missing. Every business has unique data. IBM helps your AI access your data wherever it lives to change how you do business. Let's create smarter business. IBM.
Wells Fargo announced a new $20 million program in 2025, teaming up with nonprofits to support small business owners. That's how Wells Fargo is helping strengthen small businesses and communities. Wells Fargo, the bank of doing. Learn more at wellsfargo.com/say-do.
This is Bloomberg Daybreak Weekend, our global look ahead of the top stories for investors in the coming week. I'm Nathan Hager in Washington. This week, China releases the latest readings on consumer and producer prices. For more, let's go to Bloomberg's Doug Krisner, host of the Daybreak Asia podcast.
Nathan, the Chinese economy is caught in a deflationary trap, and the factors that led to steadily declining prices appear to be firmly entrenched. Bloomberg Economics is saying it's going to be tough to shake. And to make matters worse, economic growth in China in the current quarter has been weak. Let's bring in Bloomberg economist Eric Zhu, who covers China and other economies in the Asia Pacific. Eric joins us from Hong Kong. Eric, thank you so much for making time. This period of deflation in China has been going on, as we know, for several years. Why the stubbornness?
I think the key reason is the demand side, so the consumer side, business side. I mean, the domestic demand is too weak, so it's not enough to, driving and sustain inflation. Especially, I think a key issue is the confidence here. So we see lots of data, see consumer, they're deleveraging, corporation, they're also deleveraging, so no one is willing to borrow, to expand consumption, expand investment. So there's lots of downward pressure on the prices from the domestic side. So I think so people are over anxiety, they overwork. So basically, they don't have time to consume. And at the same time, the income is slowing, the job looks are not looking great. So people are very cautious, on spending. And if they have any, money, they would rather, save for the future, right? In the case I lose my job or I got income cut. So it's better to saving for, uncertain future rather than spend whatever I have right now. So I think that's a deep-rooted issue which is creating a very deflationary economy right now.
At the same time, I think we need to mention the issue of excess factory capacity. And this is something that many of China's trading partners have been critical of, China essentially exporting deflation.
They're, blaming China for, dumping those cheap goods into their country and, taking their markets. So, but at the same time, I think the key issue is although China has a very big domestic market, but just right now the demand is too slow. Nobody is willing to spend, so they cannot digest all the production within the country.
Under these circumstances, Eric, do you believe it's possible for China to achieve that growth target of around 5%, or will a lot more be required in terms of stimulus?
I think in theory it's possible. You see this year, so although the 4Q, the last quarter, I think the data is quite weak, but they basically have done that within the first 3 quarters or within the first half of the year. So I think it's probably the same, style next year. They want front load some stimulus, at the beginning of the year, make sure we have a strong first half. Then on the second half, they might, relax the momentum a little bit. But I think in theory, we do not really think China needs to maintain a 5% every year. So if you look at the 5-year plan they just released in October, some reading is that if you still want to achieve the 2035, the development goal, I think it's at most you just need 4.5% growth over the next decade. So I think probably next year they're still going to maintain a 5% growth target, but I think further on they might gradually, be more relaxed on the growth target. It's no longer, I don't think 5% is a must-hit target. Maybe next year, but in the future years, I think they want to give more room, even softer language, which means we no longer have to hit the hard target of 5%. They might, change the language like a range, right? We have a range target instead of a very hard 5% target.
So help me understand how the currency enters into all of this. Lately, the Chinese yuan has been stronger, particularly against the dollar. And if anything, you would think that authorities in China would want to slow that down just a bit.
I don't think the government, will allow a very quick appreciation, just like they won't let depreciation to happen very quickly. So I think the government is okay with, appreciation or depreciation. They just don't like it a very sharp one-way, movement. So they're more like, you can, gradually do that. But I think that the fundamental reason is, one is the weaker dollar, so globally because of U.S. policy. And another thing is, I think it's some funds coming to China, betting on China's tech boom, and also the tariff side. The China-U.S. relationship seems, in a quieter period right now. So I think before the next escalation next year, probably. So I think it will give a window for the currency, Chinese currency, to gain stronger. But on the PBOC side, I think they will only try to manage this to happen in a slow motion, not overnight.
So if you had to speculate on what more stimulus might look like, give me some possibilities. What might Beijing offer?
Yeah, I think next year it's probably quite similar to this year. I think on the monetary side, there are going to be some modest easing, interest rate cuts and the RRR cuts. I think it's more emphasis on the fiscal side. So like this year, I think again next year they will do some short-term consumption stimulus, right? Those subsidies for trading program, and also I would like to see more some long-term structural measures, like I just mentioned, more subsidy for childcare, for elderly care, for services consumption, so which can help consumers ease their living of cost burdens. So I think if the government continues to do this, in a sustainable way, that will give consumer more confidence. Okay, the government really, cares about consumption and they want to support us. Although the amount may not be such big, but you add this, add that, add together, I think it can create, more stimulus for the consumption next year.
As we know, the weakness of the property market has been central to the problems with China's economy. Can you envision some sort of recovery that may take place, let's say, in 2026?
Depends on how you define recovery. So my definition of recovery is, like the government saying, halting the decline. So if we can achieve to, decline, decline less than this year, so I will think that of progress. And I think that's also the target of the government. I think they're okay, with the correction in the property market, but the bottom line is there are no collapse. So as long as, the adjustment is milder than this year, I think they will feel comfortable. But that being said, I think in the near term, they still want to, prevent a very sharp, slowdown, and they want to, put a floor in the market, right? So you can go downward, but just like 5% or 10% down, it's okay. But like 20%, 30%, I think that will create more nerves for the government. So I think we might still see some support measures in the near term. So some, relaxing, more mortgage relaxation, and more, just reducing the transaction costs. So which can help, stimulate the demand a little bit, trying to stabilize the market. But I don't think the correction will be over next year. We're going to still see the market is down, but probably the magnitude of downward adjustment will be milder than this year. So that will still be some progress.
Eric, we'll leave it there. Thank you so very much. Bloomberg economist Eric Zhu from Hong Kong. We turn to digital currency next, and the firm Utrip. This is a fintech platform based in Singapore, and it's known for a multi-currency travel wallet. Well, now Utrip is planning an expansion into Australia as it looks to target that outbound travel market. We caught up with Utrip co-founder and CEO Cecilia Chu about her company's growth strategy. She spoke with Bloomberg TV host Avril Hong and Sherry An.
Talk to us about why Australia. Why do you see so much opportunity in that market?
Yeah, absolutely. Utrip is a multi-currency digital wallet that comes with a travel card. So users can actually use us to buy anything online, offline, around the world in any currencies at the best FX rates. We started the business 7 years ago here in Singapore, 2018, and now we are category leaders in both Singapore, Thailand, serving millions of travelers. And Australia, it's a really important and strategic market for us. What we are committed to do is actually to invest into the market for the long term. Australians love to travel, just like many of us. Every year there's more than 12 million people going overseas and spending more than $50 billion on this category. We think it's going to be such a strategic choice for us to be there. And many of the people also tends to make longer trips. What we saw in Singapore, Thailand, we tend to travel about 6 to 7 days each time. For Australians, they like to make longer trips, like 15 days on average each time. So I would say that, for our no-fee proposition, best FX rates, we hope we can actually make a meaningful impact on how they travel and how they spend.
So that said, Australia is a market where we do have already quite long established local grown players. Yeah. How do you expect to differentiate yourself?
So absolutely right. In terms of the banks who also might have a very similar offering to us, I would say we differentiate ourselves with our laser focus on the traveler segment, on the cross-border segment. So when you really take a look at the big banks, right? So they do many things. They have saving products, they have lending products, they have mortgages, they might have 20 cards in just the card portfolio. So how we differentiate is over the last 7 years, we actually have created and optimized our business model, our pricing, our partnership network, and also our product features to be sure that we actually offer the best and most competitive product for travelers, in any of our markets.
Cecilia, that sounds like you're going to need a lot of employees to do all of that. Your expansion seems to be accelerated at this point. What does your workforce look like? Are you hiring more? What regions are you putting more people in?
So a key part of our market expansion strategy is localization. So, of course, over the years, we now have 300 people in the business and we're growing in size. But for Australia, we have established a Sydney office. We are building up our team. We already have boots on the ground. And most importantly, we are going to do much more in the market. So we are going to have partnerships team. We are going to have customer operations. We are going to have product, compliance, marketing, really all aspects of the business. So I would say localization is a key aspect when we think about our strategy going forward, when we think about growth, because it's very important for us to show that deep understanding and also appreciation of the local preferences and also the local culture and people.
That was Utrip CEO Cecilia Chu speaking with Bloomberg TV host Avril Hong and Sherry An. And I'm Doug Krisner. You can catch us weekdays for the Daybreak Asia podcast. It's available wherever you get your podcast. Nathan?
Thanks, Doug. And that does it for this edition of Bloomberg Daybreak Weekend. Join us again Monday morning at 5 a.m. Wall Street time for the latest on markets overseas and the news you need to start your day. I'm Nathan Hager. Stay with us. Top stories and global business headlines are coming up right now.
Running my small business was like playing basketball 5-on-1, and I was the one. Now, QuickBooks gives me access to a team of AI agents and trusted experts for the assists I need. Nothing but net.
Outdo it with Intuit QuickBooks. Feature availability varies by product.
JBL wireless earbuds are for those who are the first to try something unique. The first wireless earbuds on the market with a touchscreen case, which allows you to control your audio without reaching for your phone. They also have a touchscreen smart charging case for one-touch control. I love being able to touch my buds and control the volume. With a built-in wireless transmitter that lets you plug and play with any device you want, JBL wireless earbuds connects you to all your favorite music, movies, and games. JBL wireless earbuds. Grab a pair at jbl.com.
Streaming December 11th, it's the new limited series Little Disasters.
Happy families, perfect marriage. What happened?
Social services have been called in.
I've known you for 10 years. How could you make that call?
These rich families, concealing things seems to come naturally.
Starring Diane Kruger.
You can't take out children.
And Joe Joyner.
Parents can do some terrible things in moments of frustration.
Little Disasters, all episodes streaming December 11th on Paramount+.